Hi friends, now we'll talk about equity takeout. What exactly equity takeout means and how we can use it. Let's say someone's bought a house which has gone up in the value. Now clients, that person needs to use that equity in the property which has appreciated. So there are three different ways to take out the equity from the property. The first is refinance, which is the first option we look at. The second thing is a home equity line of credit. Sometimes the clients are tied up in a term which we don't want, the clients don't want to break to save the penalties. So they would require other options. The second option is home equity line of credit, and the third one is a second mortgage. So refinancing and home equity lines can go up to loan to value 80% total of the value of the property. I'll give you an example here. Let's say the value of the property is 500,000 and the existing mortgage is 300,000 from a bank or any lender, and you need to take out rest of the equity. So you can go to a maximum of 80% loan to value, which is $400,000. So $400,000 minus the existing mortgage 300,000, you can get 100,000 in your pocket as an equity takeout from that property. So this is a scenario, and on the second mortgage we can go 85% loan to value. That means we can get another 25,000 if we need in some case of emergencies or certain important requirements. Now we'll just briefly tell you who are the clients who are taking the equity out of their houses. People who want to consolidate their high existing interest credit cards and loan. People are paying very high interest on certain credit cards and loans, and they don't realize they're tired of making the minimum payments, and now they want to get rid of it. And yes, we help people with that. The second kind of people who are taking the equity takeout is the ones who need the money to pay for their kids' tuitions, which is pretty expensive when the kids go to university and colleges and they need the bigger amounts. Third is the expensive renovations. We want to get it done in our houses. The kitchen, new roofing, flooring, a basement finishing. All these are the categories where people are taking the money or making the use of their equity in the houses they're utilizing there. Because, the other one I would add up is the businessmen who take out the equity to reinvest in the business where they can make much more. They can be buying their equipment for their business, they can be buying the commercial vehicles, or to pay off the pending invoices they have. So these are the kind of people who are using it. So anyone who has the equity in the property and they have these kind of debts, please consult us. We would be happy to help you out. I would always say, guys, use your equity for a positive thing. Don't use your equity to buy an expensive car which will depreciate in future, and you lose that equity from the property. For further information, you can contact us, and feel free to browse on the webinars on this website. We have a lot of important information to make you financially sound and healthy. Thank you.